Welcome everyone to the Kendall Report. It's Thursday night, the final broadcast for the week. Remember to subscribe, like, and share these videos and hit that notification bell so you'll know when I come live. Well, folks, interesting day today as we watched in the live trading room. We just kept grinding out in the end of the session. We traded up. We're actually trading at near the highs right now. We're up 225. We were down about 10 handles, 12 handles or more, I guess, on the S&P futures, and we're now at 3801, up 175. If you notice, the title of this video is that I think we're going to have a Q3 rally. I think this next several days, we don't finish this month and this quarter until the end of June. But I've been talking about this a lot. The configuration I'm seeing here now is really starting to set this up. In fact, I even thought it was interesting something that Powell said in his little testimony he's been doing, is he said that banks could stand 10% unemployment, this was a stress test, and that they could withstand a 55% drop in the market. So this guy gets everything wrong. So that was probably a buy signal in itself. This is, I guess, an interesting scenario that's setting up here. And I've been talking about it a little bit. I thought we're going to get a confirmation of longer-term downtrend, but we're going to most likely see some sort of recovery rally. I've defined it the best I can at the moment. As we go through the next several months, we'll be able to fine-tune and see where there's going to be a rejection point. There will be, and I believe that after a positive quarter, we'll resume to the downside. So I'm not by any means expecting all-time new highs and we're reversing, everything's okay. But I think you saw some things really interesting today. You saw the 10-year actually drop all the way down to 3% and change. And that was a pretty interesting drop considering it was 10 days ago on June 10th, I believe it was. The 10-year was trading 348. So we've dropped 50 basis points while the Fed has come out and said they're going to raise rates multiple times across the board. And meanwhile, rates are coming in and the yield curve steepening. I'll show you all the details here just in a little bit. But this is a very interesting scenario. And I think what we've been seeing is the stress that we've seen in the market has kind of hit the bottom. And so everybody's still high on this energy trade, which is imploding. I think energy was down, down 3.7% yesterday as a sector. So we're continuing to see that implosion there. And everybody still likes energy because that's they're still looking in the rearview mirror, but all of a sudden they're seeing the car go off the road while they're driving straight. So everybody still likes that trade. That concerns me. I think we're likely to see some rotation. I'll nail this down when we get into this next cycle, but I think we're going to see something really interesting. And I'm not, like I said, I was talking about the 36 handle, maybe even 34 handle. That's off the books, I believe, right now. And the next several days will be important. But more importantly, as we finish this quarter and start the next quarter, I think you're going to see some interesting events to come apart. So let's look. I'm just looking at my notes here. Let's talk about what came out yesterday, and we'll go through some other things that I believe are going to be important. And so yesterday from economic, we got claims coming out at 229. They were down a little bit. Continuing claims were up 15K, 1.315. I don't think these numbers matter right now. I don't think they're material to anybody, but I'll mention they came out. Manufacturing PMI came in at 52. That was the IHS. And the service PMI came in at 51. The last time the service came out at 53.4 and we're at 51 on the manufacturing, it was at 57 and it's now at 52. So we're seeing all these metrics starting to flatten out. I still think the economy's hitting the wall. I still think we're probably in a recession, but that doesn't mean the markets can't bottom and rally here for a little bit. So likely what you're going to see, especially with the implosion of copper and some of the other commodities, even wheat, and everything's kind of imploding here at the moment. So the dialogue is going to be, hey, maybe inflation peaked, all the negative scenarios may go away, and it just takes just a little bit for market sentiment to change, and folks are looking for a reason to buy anyway after this big decline. So it's going to be interesting, like I said, as we go forward. Looking at the one thing I do want to mention before we get into some other details. Well, just real quick, Friday we have new home sales expected 570. I think that's going to miss, but we'll see. Some of the metrics on the housing been coming in a little better. And then we have the U of M sentiment coming out. That's expected to come in at 50. No big deal, I don't think, there. But here's the big deal I think we need to watch is the Russel indexes are going to be rebalanced here. And I don't think they'll get all the rebalancing done. There are lots of stocks being, especially in the 1,000, there's a lot of energy stocks that are going to get shifted around. It's going to be interesting to see how this rebalance happens and what the effects are, but there's a big rebalance going on. It's some of these things have already been working around in the last even a couple of weeks. There have been some movements in some of these indices. So we're going to see as we come into next week and end of the quarter, I think a lot of window dressing, a lot of rebalancing going on in the Russell, and we'll see if that has any effect. But I think it looks like it could be something to pay attention to. Just a quick mention. I did see that, I've been talking about this yen situation. That is stabilized for the moment. So that's off the books as well right now. So we'll see everything's come out. That's why the treasuries are rallying and yields coming down. So that's a very interesting situation from the standpoint that all of a sudden a lot of these things that were negatives that looked like they were going to tip the boat over have all of a sudden stabilized. So it looks like that should do it for this. Let's go ahead and take a look at the database, and I'm going to go through some longer term ideas on the S&P and carry through those thoughts on the other indices. So interesting development. You may recall that last night I was talking about the database needing to get back to 22% plus. Guess what? Ask and you shall receive. Folks, you need to pay attention. I'll say these numbers. They literally happen the next day. Look at this, 22.28. There were 1,763 buy signals today, 165 sells, so huge 17-to-1 buy versus sell ratio today. Very, very bullish, especially in the 3-2 model, which is our longer holding model that we have. So that's, I think, a significant event, at least getting back to those numbers. The other thing that happens today is we get our intermediate signals. We're at 7.6% right now. And maybe we'll get some traction. Maybe we'll start to see some clawing off the lows of the intermediate database. We've not seen anything like this. I'm just going to put this out there. If you folks have not taken a look at Wavetech, if we get this rally over the next three months or so, we'll say 3.5 months. I don't think it's going to rally exactly to the end of the month, but we're going to see a lot of rotation back in the database then. And depending on what happens, you're going to want this platform. And the good news is it is the end of the month, so it's only going to cost a handful of dollars. It's prorated every day. So you might want to go to kendallreport.com/Wavetech and take a look at that, because this is going to be a tool that's going to help you find a lot of new ideas. And last time in 2020, when we got a turnaround, it was huge. I mean, there were some monster trades there. This is not quite as deep as 2020, but I'm telling you that the destruction that's went on inside the market is really resetting a lot of things, even if it's probably for a quarter. I don't think it extends beyond that, but this is something to consider. So make sure you go to that link and check it out. and I think it's $6 a day or something like that. So it's, there's literally less than a week. You can get in there and figure out what it does, and you can cancel by the end of the month or just continue on. It's a month-to-month contract. Anyway, let's go ahead and take a look at the S&P. I think that the most interesting thing here that's happening, we did get some Fibonacci targets that coming in, and I'm going to talk about some retracement values off of the monthly charts. There's a whole bunch of things I want to unpack here. And what we're looking at right now is that the high target one is 4,033, 4184, and 4277. And the real target, what's happening here, if you look down below, those of you that have the PPMs and the indicators, you can go to the link at the top of here and get the indicators. But we're getting a first and second derivative breakthrough on PPM3 down at the bottom. You can see my cursor here. That is broken out. PPM1 is turning around. PPM2 will go, but basically what it's telling us, the minimum move is going to be toward this 39.36, 39.79 level. And I'll show you some other numbers here in just a second. But this looks like a turnaround. We got a bubble bottom. We had a bubble here. We had another bubble over here that's based on the market grid. So this is, we've had now, even though we've had several days up, I was expecting the potential for a couple of days down. As we're looking here, we're trading 38.08. This is new highs off of yesterday. So we're breaking above yesterday's print high. So it's definitely starting to surge. We're now, right now, the low was 81. So we're 30 handles off the lows so far in the evening session. So this is starting to move. I don't think there's anything coming out that you're going to have to worry about. Like I told you, as far as economics go, new home sales, I don't think anyone's expecting anything good there at all. And the other report, the U of A or U of M, sentiment isn't going to be impactful at all as well. So there's really, this is going to be driven on the market sentiment from that standpoint. And let's go over and just take a quick look at what the market grid's telling us. Market grid R1, 38.24. We go to R2, 38.50 for today, and R3, 38.77. And we've been seeing these 100-point, 80 to 100-point swings. So if we go from the low, that R2 is very likely to print, and that'll put us up at 38.50. So be aware of this number. And like I said, these PPMs are turning around here. So I'm going to take you over to the S&P, and I've got one of our indicators we talk about is the webs. And I want to show you what's going on here because I think it's interesting. We're at a point, this is the quarterly chart, and I'm going to draw in what I think is going to happen here. We'll see what comes out of this ultimately, but you can hold my feet to the fire here. But I think what's going to happen, we're going to close somewhere probably where we are now, a little bit higher for this quarter, which will be next Thursday. And then what I'm expecting is an inside bar. So if I'll give you a couple numbers and I'll show you, I'll run the Fibonacci's here so you can see them. But here's the numbers. The minimum move I just talked about that's on the daily chart, but looking at the quarterly and monthly, 4104, 4336. A number of weeks ago, right before I went out of town, I thought we could see a 43 handle. Well, that's back in play again. The extreme that would probably be allowed in this quarterly rally would be a move back to 4,400. So that's a decent rally from here. That's roughly 400 points plus, 400 to 500 points. So this is a pretty good rally. It should be a tradable rally. But then I believe after this is done, we probably see a negative quarter, and then we get multiple quarters. And meanwhile, all these linear regressions will be where we'll get rejection point. And I'll cover this as we come. And obviously, this is 3 months that we have to watch this one chart. But this is what I'm expecting from the standpoint of the market. So up for the next quarter, that'll put us into the September, and then October, November, and December are probably going to be negative the way it's setting up right now. We'll see when we get there. Maybe there's more information that will be revealed, and we'll start to possibly, see something bigger. But I don't, at the moment, I don't think that's what's going to happen. So let me clear this off, and let's go back over to TradeStation. And let's click this over and do a monthly chart. And I'll move this over. I just want to go up, and I'm going to run the Fibonacci, but this is the range that I'm looking at here from this standpoint is the highs at that 48 handle, the lows that we recently printed, and I'm just going to go to back to the 21-month moving average. That puts us right minimum up there at 4,100. The 10-period moving average. The 10-period moving average is at 4,360. So I'm going to draw this in just so you have a good context. I think this is important because of the rebalancing that's going to happen in Russel and all the events that are likely to come in as we go through the end of this month. So let's take a look at something here. I'm going to draw in some scenarios here on the screen. And so we have the 10-period moving average, and the PPMs are, I have to reset this. Bear with me 1 second. Unfortunately, this thing's moving around with me. So let me just run the numbers. I'm going to draw in what I think will come out of this pattern here. So the 10-period moving average is going to roll over. The 21 is going to cross here. The 40 is going to continue. And if you look at the values, we have positive values. I talked about this several weeks ago. We have an upsloping 21. We have an upsloping 40-period moving average, 0.77, 0.59. Looks like we're going to close well under the 21-month moving average. But these moving averages should start to roll over here. And I'm just kind of drawing in what's likely to happen. And this is monthly. And the 40 is going to come. So the 21, let me see if I can just draw a round line here. This is not going to be good with a mouse, but this would be how the 21 would go. The 10 is going to come down through here. And then the 40 comes over here. So we should get crossovers and all the moving averages, and then ultimately we'll figure out if we're coming down to these levels here, which are some lower Fibonacci targets down at 31 and 2,800. So these are big numbers from that standpoint. But all of these averages are rolling over. These are monthly. There's big time PPM values on the downside, 1.55 on the 10. So over the next, and this is like going to be watching paint dry, okay, because these are monthly. So over the next 3 months, and as we come into the fourth quarter of this year, what we should see is that the moving averages start to roll, and the markets will trade up into these averages and then roll down. And this is what my expectation is for right now. Obviously, anything can happen, and a pattern could fail, but it looks pretty solid to me. It's one of those Dr. Given trades. It looks like it will trade up to at least a 21-period moving average, which right now, if I put that up on the screen, right now that's 4140. Matter of fact, it's interesting that the standard retracement of a 50 to 0.618 puts us at 4104, 4336. The extreme would be basically a GAN 66% retracement, put us back at 4410. Okay, so this whole pattern is going to take multiple months to unfold, And so we'll see basically a pretty decent rally. And I haven't figured out just yet, but I will, where the rotation is going to be, what sectors, what stock sets are going to move this higher. It's not going to be energy. I can tell you that. Everybody in the world loves energy yet, even though it's declined, they're all justifying their positions right now. And I think they'll be punished. There may be a rebound back. I'm not saying there's not any bounce in the oil stocks, but we've seen that. I mean, the kind of decline that we had, 14% decline, those things don't happen and recover. Maybe you get a rally back and a right shoulder, but that's not, that was the final, I guess, the final thing to break to finally punish everybody that was hanging around. Now, we've got, I'll show you, I'll go through when we get to crude oil, I'll show you that ETF hack that we did and what the performance is at. But it was a brutal sell-off on the energy stock. So if you owned any of those, you know that was the case. But overall, the pattern is setting up, and this should be consistent, whether it's the Nasdaq or even the Russell. We should see this rebound. We should see a positive quarter. I think I've made my point here. Let's go ahead and go into the Nasdaq. I'll just stay with the monthly chart for the moment. And let's just take a look at that. You can see we've traded down to the 40-month moving average. The value of the PPM is 1.02. So just like with that, it's the same configuration that I was talking about. We should see the 10-month moving average start to move down over the next couple months. Should chop through the 21. Typically this crossover through the 10 and 21, didn't mention this when I was covering the S&P, but basically when that value's crossed, it tends to be a bottom, and it tends to signal a rebound into that declining 10-period moving average. So what we're going to have here, and it will be significant, is that declining 10 through the market grid. You can see the market grid's there. So we're going to have this declining 10-period moving average. It will be absolute dominant in this pattern, and that's where you're likely to get a rejection point. Right now, that number is at, let me just give you a number here. That number is 14,454. It's dropping 400 per month. So subtract about 1,500 plus off of that. That would be the extreme. It doesn't have to go to that average, just has to rebound toward it. And once we get the end of the month, we'll have a new market grid update. We'll have a lot of different metrics that we're going to measure that. But the only thing that needs to know right now is that we are going to rebound toward these numbers. And as far as failure goes, virtually any number, I would say you'd have to take out the lows that we recently made, but I don't even see that happening right now. I think you're going to see a pretty decent bounce here. We're looking at Nasdaq right now up another 39 yesterday. Looking at Nasdaq, it was up 1.62, so we're up another 0.34, so almost 2% just since yesterday, right? So there's a definite positive move going on here. Let's go down the scale and let's take a quick look at the daily, and we'll get the market grid for the daily. And the market grid for the daily is S1 11,648. We've been down to 776. We've probably seen the lows of the session, most likely. Could retest the S1 R2 11,927. So possibility of a couple hundred points on the upside. And remember, not only is all this rebalancing going on, but it's the end of the week, and we're coming into those final couple days of the end of the month. So there's just going to be a ton of window dressing coming into the end of the second quarter. Everybody's rethinking everything. And in the case of the Russell rebalance, that has to do with more index index metrics that they are maintaining, which is going to cause some of these movements. So it's going to change these indexes around a little bit. So this is, I think, an important moment in time. And it's been real easy to be negative. It's somewhat bold to be positive, but I don't think it's going to be that bold, as you will see. Here's the Russell. We also have some upward Fibonacci targets here on the Russell. We're looking right now at high target 1, 1830, 1902, 1947. We're trading 1711, so that's a couple hundred points. We need to get above these moving averages that are currently at 1795 and 1808. So there's a pretty decent rally just to get to there. But we're definitely seeing the setup, just like with all the indexes. They look exactly the same. And so PPMs are not quite as bullish here, but if we go over, let's just take a jump over to the monthly so I keep that perspective we had. This has really been a strange chart. This has already seen the crossover. I was just talking about this. Let me see if I can blow this up so that you can see it a little better. So this is where I've got my cursor here. We just got the crossover this month, which typically, like I said, the 10 crosses below the 21 typically sets up a little minor bottom. So the 10-month moving average will be major resistance. That's 2053 right now. So they'll definitely, that rally that's showing up on the Fibonacci targets and the price target is telling us that we're probably going to test this 10-period moving average. Doesn't mean we're going to get through it. Doesn't mean there's any big rally coming other than this retracement rally and some kind of Q3 rally. And I just want to preface something on everything I'm talking about right now. Is this Q3 rally, it doesn't mean it's going to rally for 3 months. It could be 4 weeks, 6 weeks, it could be 3 months, and it might extend a little bit from that standpoint, but there's no timing on this particular situation. It's more of a price target, looking into these Fibonacci targets and looking into these moving averages, especially with these huge values to the downside. The PPM on this monthly chart is minus 2.66. So it's a big number. We're not likely to get above the 10-month moving average. We'll see maybe in 2 months' time. It moderates a lot. Maybe there is some possibilities, but I don't see that happening. Guess I'll just stick with the theme here as we go through the 10-year. Let's just look at the monthly values here. And we did the RTX value. The RTX value on the 10-year, just looking at this, was 3.47. We printed 3.48. So we went right up to RXT. We got rejected off of there. We're trading 306 right now. The 200-month moving average, get that to come up, is 2.64. I talked about last night that there's a possibility. I'm going to go over to a weekly chart. There's a possibility that we pull back into this 21-period moving average here. It's at 2.5, but we could see a 2.95, 2.85 level on the 10-year. And if you think about this, that's pretty phenomenal because, you know, wait a minute, we're supposed to be having rates declining or going up right now. And so what's happened is, I've talked about this before, the the market is wagging. It's no longer the tail wagging the dog. The dog is wagging the tail. This is the market telling the Fed where rates are going. And the Fed's just sitting there letting that happen across the board. So we're coming into some pretty substantial support that I talked about last night. The 10 period moving average 2.98, so right at 3% at the moment is going to be big. But if you look at the PPM, we're still positive, but it's starting to decline substantially. PPM 2 is about to break down, and PPM 3 is also trying to break down. And all of these things are rolling over, so it looks like maybe the increase in yields, at least on a 10-year, are not going to happen. Will they continue to jack the rates up? It's going to be interesting. You know, I was all hard in that the Fed wouldn't make a pivot, but they may not have to, because these rates are being adjusted by the markets. So it's going to get really interesting, folks. We have a meeting in July coming up, so we'll have to just pay attention and see what's going on here. But these are pretty substantial numbers. Like I said, 3% is major support right now. If I go over here and bring up the intermediate charts, which that was, the daily, if I bring that up, you'll see this sharp decline. We got an RXT sell 4 or 5 sessions ago. We're continuing to decline. We're right into the 10, 21, and 40 period moving average, 3.058. So we're right there, 3.068. And the 40 right now is 2.95, which is very similar to that 10-week moving average. So we should stabilize here. But this is, I guess, from the standpoint of what the Fed's doing, it's going to be interesting if we continue this decline. And I still believe that when we saw that big rally sell-off in the treasuries back on the 10th, that was indeed probably some selling by foreign entities. But now all of that's changed a little bit. The yen came back quite a bit, actually rallied quite a bit, and the Dow yen came back in quite a ways today. So just know that this is likely to stabilize, but we're ultimately could go down as low as 295, 285. I'm putting that target at the moment, which seems almost ridiculous. And the cap on this market right now is going to be around 325 on the upside. So we're going to call it right now 3%, 325, with the possibility of printing down below the 290 level, maybe 285. Let's take a quick look at the yield curve. Yield curve just straight up steepening in the last several sessions. No inversion. We're now up 0.46 on the 530. The 1030 is 11 basis points positive. So everything went back straight up to where it was before this decline. So we had this big crush, and now we're right back there. So it's difficult to tell whether these are market conditions causing this or whether the Fed is doing some behind-the-scenes manipulation. I'm unsure at the moment, but just monitoring all of these situations as we go forward. So next market is crude oil, continuing to be under pressure here. I talked a lot about this last night. The PPMs are still accelerating here at 104. I think I'll look at this is the daily, so short term we'll go bottom up, but we're still seeing a fair amount of downward pressure here. We're trading below all the averages. PPM 1 is a minus 1.29. That's a big number. That resistance point is at 110. So now we're looking at probably a buck, 100 to 110 as the range from the standpoint of trading. We also have some support here at 100 on the 21-week moving average. So far this week, we traded 101.53. And like I said, these PPMs are starting to roll over. They're still positive. So PPM 2 has a positive slope of 1.24, which tells you that should hold those values for now. So that's going to be exactly your trading range. We're going to call it basically 100 to 110. Real quick, I'll just come up. I know I talked about the energy stocks. As long as we traded above, that crude stayed above 95, we'd be in good shape. There's so much money flowed in there, and now everybody's looking for an escape. So it's going to take a while to work through that to see if that sector comes back into play. And I'm not sure that's going to be the place. But like I said, I'll be working on all the sectors there from that standpoint. I want to show you just real quick here. I'm just bringing up the Portfolio Expert platform, and this chart here in the middle, I'll bring it up. This is the pink line is the ETF hack. It had done really, really well, better than the green line is the XLE. The pink line is the remodeling of this, but this recent decline, it just plummeted. Now, we did get into cash, so we stopped the decline. We're about 80% in cash on this strategy, but the XLE actually went down to about 86. We stopped at about 102, so about a 14% difference in the returns. This blue line down here, by the way, is the S&P. So all of this stuff was able to do pretty well as we went forward. So this is the symbol graph on XLE. The original buy on the XLE from our modeling came in back on 12/24 of 2020. And I do believe, unless there's a huge rally back, that we're going to see a exit of not only the XLE, but also our sector. I talked about that last night in the live cast last night about the energy sector has rolled over. And when these things roll over, especially when you're looking at the weekly basis, you're looking at several months to get back on track. There's been a lot of damage on the steepness of this decline. Next, we'll cover gold. Gold is continued to be boring, but there's something that came out. We remember I've got the cycle low due this week. So we're looking at the potential of a cycle low. We also have some Fibonacci projections, which seems kind of odd out of this pattern at the moment. But as long as we don't take out the lows that we printed down there at 1791, this will be valid. But there is a cycle low coming in. This is a weekly chart. PPMs are still very negative. There's not a lot of possibilities of this thing rallying a lot out of here, really more staying stable. And I would like to see this back over the 1850, 1845, 1850 would be the minimum number. Anything below that, there could be some challenges early next week. But like I said, there is a cycle low due here. Okay, the final market we cover is Bitcoin. Bitcoin continues to stabilize down here around this 20,200. So far this week, we did get down to 19,757, but this 20,200 number is 20,000. Actually, 416 is the 200-week moving average. We continue to try to hover around that. Maybe we can get back above there, but we're flatlining again, and we've seen these flat lines in this market. It's even more evident if you go over to a daily chart. And daily is trying to break out. Look at PPM1 is turned over pretty good. It's still down 2.18. So there is a substantial amount of resistance. The 10 period 28.59. We're trading just above that. If we could stay above that and close above it, and we could start to see us move in between the 10 and 21 period moving average. But as far as any new uptrend or anything, not likely to happen from these levels. And I guess a better way to put that Bitcoin is going to have a lot of resistance as we go forward. We could get a bottom and move up, but it's not ready to start a new uptrend at this point. Anyway, folks, that's going to do it for the week. I appreciate everybody coming and watching the show and participating. Those of you in the live room today, it was great session today. So make sure you go, and the link is on the top of this page here. Get the indicators, and I'm hoping, it depends. I'm installing a brand new computer tomorrow. I've had it. It's like Christmas time. A box sitting over here, and it's ready to go. So if I get everything together, I watch my Twitter account. So follow me on Twitter at Portfolio Expert. There's no E in the expert, so Portfolio Expert, no E. And follow me there, and I may be doing something like I did last Saturday, where I might be doing some a trend following or understanding the PPMs and all the suite of indicators and how to follow trends. I did, if you haven't watched that video I did last weekend, it's 3 hours. I apologize for the very ending, was very abrupt because the software I use just collapsed out of nowhere, just stopped working, actually gave an error, logged me off, it was all over. So we're unable to finish that. But just go ahead and make sure you watch that. It's on the channel, and it was a seminar for all the indicators. But more importantly, I hope to be able to do this weekend. I'll put a tweet out if it looks like tomorrow's efforts in rebuilding this office come together fairly quick. So anyway, folks, thanks for watching. I'll talk to you on Sunday night. So finally, we don't have a holiday or anything weird going on. So Sunday night, I will be here to go over the markets and set up the week. Have a great weekend. Have a good day trading tomorrow, and we'll talk to you on Sunday.